As Power for All explores some of the upcoming finance trends for 2017 in the decentralized renewables space, we are lucky to be joined by Itamar Orlandi, head of Bloomberg New Energy Finance's research team on independent energy systems. And Itamar certainly knows a few things about off-grid solar market trends, having been the lead author of the groundbreaking 2016 report by Bloomberg, compiled in partnership with the IFC and the Global Off-Grid Lighting Association. Thank you so much for joining us, Itamar. So to give us a sneak peek into some of the movement in the market, can you highlight any emerging finance trends we might see more of or want to look out for in 2017?
Hi, Susie. Thanks for having me. I think purely from a financing angle, the most important development was probably the recent rounds announced just over the last 2-3 months by Nova Lumos and by Mobisol. Over $60 million in equity together across the two companies. And I think there's a few things to highlight out of that, and that probably will also reflect into 2017, what we're going to see. First of all, that's just been equity. There's been some more debt, but actually relatively big amounts of equity. And that means it's primarily destined for expansion, not just to refinance debt that the companies have handed out to consumers. So those are expansion plans. And then the primary reason why I've singled out those two as opposed to some of the other pay-as-you-go companies that have also raised money this year is those two were the ones that were purely commercially driven. So that probably means those are Africa-savvy investors, and it probably means they're seeing a commercial opportunity with these partners, and they can also serve as strategic partners for the pay-as-you-go companies to scale. I also don't think it's a coincidence that it was Nova Lumos and Mobisol that got there first, if you like. Both sell relatively larger systems compared to some of the other players, which means they can essentially their customers are more valuable to them in money terms. So I don't think it's a coincidence that this is where investors see the commercial value. And I also think it's actually interesting. About a year ago, when we talked, we said the expectation is that a lot of the focus is going to go into raising debt. We've seen some of that, but we've still seen quite a bit of equity coming in this year. So the question is now going to be, many of these players in the field are actually reasonably well capitalized in equity terms now. And the question is going to be, what are they going to do with this money in 2017? How are they going to scale? What is their strategy going to be? And how are they going to eventually leverage that to really raise even more debt? Because that is really what they need to scale their business model, to refinance the debt that they give to their customers.
Great. So it sounds like it's quite an exciting year ahead in terms of some of those new opportunities that may come to light. In the 2016 Bloomberg Off-Grid Solar Market Trends report, it showed that the size of the deals in the off-grid space have grown dramatically, and that example of Lumos is an incredible instance of just that. But it also showed that the number of companies that are receiving the investments is still quite small. So what does the pipeline for investments look like on a broader level for 2017?
Yeah, look, I think the sort of the blueprint is becoming relatively clear. I think it's probably needless to say at this point, but it's only really pay-as-you-go solar companies that have raised money this year, with very few small exceptions. So the blueprint is basically be a pay-go company and have a track record as a team. And that's also why you get sort of the same names, and the people that raised money this year were largely the people that also raised money the year before. It's the Copas, Offgrid Electric, Mobisol, Lumos, Bebox, maybe a very, very few others. And even D-Light, who raised another round this year, that one was justified by them switching to increasingly sell through a pay-as-you-go model as well. But as you said, that's still quite a small universe. It's still a handful of companies, and those have now, at least some of them, raised quite a lot of money as well. Now, overall, we're just approaching probably somewhere in the ballpark of 1 million units sold through a pay-as-you-go model, and that's still tiny compared to the the overall opportunity, but even if you compare that to, say, something like the ITCO program in Bangladesh. So for the market to really scale, you'd need sort of the long tail of these new companies that follow a similar blueprint, but want to do it in other regions or slightly differently and come in and compete. And I'm not sure that if you're an investor, that this pipeline is really there in terms of the companies that, are tiny today, but are going to be bigger in 2-3 years' time. So once the blueprint is clear, there isn't really this field of teams copying that same model and applying the blueprint. Now, that could go different ways if you look forward. One is, the recent equity deals, and then people start to see that investors are interested. People start to see that commercial investors are interested, and maybe that could accelerate people copying the business model and trying to go on their own way. The other way it could go is that the existing players just would start to expand more aggressively and establish new markets, enter new countries, be that directly or be that through sort of licensing and franchising deals, and that you could start to see a bit of a land grab emerge about who's going to put their foot down in which territory first. And the third option that I can see, and that's probably particularly interesting around Lumos's deal, is that the business model starts to be proven for telecoms as a distribution arm as well. Lumos works very closely with telcos, and I know Bbox is already working with a telco to enter West Africa. So that would be a third option in terms of finding a new investable pipeline or finding new people that come in and distribute.
Fantastic. And in a sort of future crystal ball looking, are there any other big market changes that you see emerging or might anticipate for next year?
Yeah, I think there's a few trends. So first of all, we've seen Azuri announced a partnership with a satellite TV company, and I think that hints to a bigger trend that is the overlap of solar systems and connectivity in those regions. I think that's been a trend we've seen for a few months, if not years now, and I don't see any reasons of why that should weaken. In fact, you see a lot of reasons why that should strengthen. Certainly, if you look at the expected numbers of things like smartphone sales in Africa. So that whole connectivity and solar nexus is probably going to continue. And I think generally what we're seeing as another big trend is sort of the upsizing of systems, so that the systems become better. What has been an amazing technology 2, 3, 4 years ago is increasingly a basic technology. And you can see that in things like the GOBLA numbers reflecting an increasing average value per kit. So companies are trying to push for actually more expensive units. You can see it in the PAYGO trend, as discussed earlier, with the companies selling bigger systems being more successful attracting money recently. And thirdly, I think another interesting trend around sort of the cash sale market that we're going to see is we're really entering a period now where a lot of the products that have been sold 2-3 years ago are expected to reach the end of their lifetime. So if you look at the sales numbers, sales really started to grow quite massively in 2013. There were about 4.5 million units sold in that period. And if you think that the average product will last 2 or 3 years, many of these units will have to be replaced or will stop functioning this year, possibly. And that can go several ways. Either the lifetime is, the products last a lot longer than people expected, or more likely, in my view, is products will start to be replaced, and the question is really what with. Will people go back to the materials, to the solutions they originally used? Will people go back to the same vendors to buy new lanterns? Or will people go back, now that they're familiar with the technology, and buy from other vendors, possibly generics? The answer to that, I think, is going to be quite interesting for the industry to see what's going to happen there.
And in thinking about the whole decentralized renewable energy market, so including in microhydro, mini grids, small scale wind, biomass, as well as obviously the off grid solar as a huge and exciting component of that, do you think in 2017 we might see investments increase up from the millions and take us towards that $1 billion barrier?
Yeah, it's a good question. I think you're right to remember that it's not just off-grid solar. I think the most interesting other technology that you forgot to mention there is batteries, where if anything, I'd see the most traction possibly there, or the sharpest uptick in many ways. I think it's not a coincidence that the attention is going on what we call solar, but is already essentially a solar plus storage integrated solution. That's simply the area where the technology costs are improving fastest, and it's the most modular and the most sort of replicable without having to re-engineer it in a site-specific way. So you can almost think it's the one where you can, to the best extent, use the economies of scale in the manufacturing and then just ship product and install it on site, but you don't need to re-engineer it. The other bits that you mentioned is, of course, the mini-grid question. Now, the progress has been a lot slower to date. We haven't seen the same kind of privately driven activity in mini-grids, although we have seen some. A lot of that has to do with the business model and really the ways in which people can deploy capital and the different risks, primarily the risk around what happens when the grid arrives. But recently we have seen, say, Fluidic raise about $20 million. Fluidic is a battery company, but that is in procedures or has MOUs to develop mini-grids in 2 countries in Asia and Africa. So that could be an area where I'd certainly keep watching it. And the primary reason for that is it goes together. A lot of the hurdles have been regulatory. So the questions of how much can you charge, all of a sudden you're not selling a product, but you're selling electricity, which is a regulated market. So how much can you charge for that? And the biggest one is what happens when the grid arrives. What we're seeing recently, or we started seeing in 2016, and I presume that we'll see more of that happen in 2017, is individual governments starting to tackle these regulatory questions. And my sense is that once a regulatory framework that is attractive for investors is in place, things could potentially move quite fast. If you look at the solar history, at the solar industry's history, it is in many ways an industry that grows very quickly in a particular region as the payoffs go well, and then once that regulatory framework is taken away as well, you see a bit of a bust in that region. So I think the mini grids are much better suited to more traditional project developers. They look a lot more like generation assets. So in many ways, I think they could, once the regulatory framework is attractive, you could see very quick growth in certain areas in mini grids. But the question is, where and how will it be attractive?
Very exciting question indeed, and obviously keeping our fingers crossed. Thank you so much, Itamar. Really a huge pleasure to speak to you this morning. Thank you very much for your time.
Not a problem. Thank you.